All right, folks, here we are. It's May 24th, 2024. We are cruising right along, and it's been pretty crazy since we last spoke with this man right here, Andy Schectman, the CEO of Miles Franklin. We got so much to talk about. Gold at all-time highs, silver finally playing catch-up, and we're trying to convert Andy into the XRP army as well. I just got to see Andy at XRP Las Vegas. Andy, how are you doing today?
Zach, I'm great, brother. It's good to be here. It's funny you say that, because let's just be honest, right? I'm old school guy. I'm a hard asset guy. I started doing this 34 years ago. And, sometimes you can go down a pathway of learning more and more about less and less till you know everything about nothing. Now, I could say that's even kind of true of me. I hate to even think that is the case because my vision is macro. I don't look at anything micro. I see the forest, not the trees. And it is that realization, brother, that has me doing shows with you, with Mel Carmine, with Bradley. All of you guys were at that show, and with the Black Swan guys. You're all XRP. I do shows with Natalie Burnell. I do shows with Mark Moss. They're more in the Bitcoin
Ooh,
camp. But I've
don't say that,
realized,
Andy. Oh,
I know you're not supposed to say that. I understand that. I get it. But what I try to do is have an open mind, and I try to educate myself more than anything, right?
yeah.
And I just want, I guess, the one message that I conveyed at the show, which, by the way, I told Brad I thought it was one of the great shows that I've been to in a long time for a couple of people who he and his wife who aren't promoters and people who put on shows. They did an awesome job. I would suggest people should go back next year. It was done very well, and they had myself and a few other people in that Zhang and the folks from Glint who I have struck a partnership with here in North America to represent them, and they represent me. We had a representation, and my message is that this should not be mutually exclusive, that the two camps should not be combative. They should be complementary.
Yeah.
Because I do really, truly, truly believe that there will be a marriage of commodities like gold, which is the world's only other tier one reserve asset, and crypto like XRP to have immutability and veracity and to provide liquidity. I wrote a check out to someone recently for $12,000. I bought some of his gold, a buddy of mine, and it cleared my account the next day. Called me up and said, JP Morgan won't let this clear for 10 days. I'm like, dude, the crazy thing is it cleared my account yesterday. And I have to wait another 9 days, he said. So when you talk about the need for a new system and for a system that has backing to it, something like gold, which is now the only other tier one asset, and immutability and veracity and transparency. It's just very, very obvious. So not to go down this long diatribe, but I appreciate being here. And like you said, trying to drag me into the camp, and I'm learning. I'm trying to open my eyes to the fact that this is a solution to a problem that's not going away. In fact, transparency, how fast things are done, immutability, all of these things, a backing to a system are really needed. And, that's why I'm here. And I'm not kicking and screaming. I'm actually very intrigued by what I am learning with a very open mind. So, I'm old school guy and got gray hair on the beard. You don't have that yet, but you will. But I think one thing wisdom or age teaches you, and wisdom that goes along with it, you can be smart or you can be wise. You can be both, but wisdom comes with gray hair and time and age. And that is that, you can't be married to one ideology. You have to open your eyes and see the world is changing. If you don't roll with them, you get rolled by them. So it's good to be here, brother. And I learn a lot from you guys and hope to continue to do so.
Yeah, we tried to bring, we tried to bring Andy to our initiation ritual to bring him in, but he said, not this year, maybe next year. So what happens in Vegas stays in Vegas. No, it was so great to get you there. So great to get Lynette there. And the combining of the two camps, it's just a match made in heaven. It literally is. Because we need this type of technology to roll us into a new financial system that is backed by these commodities and resources that actually run the world. Now, speaking of that, let's get right on into it, folks, because we have so much to talk about here, Andy. So much has happened since we last spoke. We have gold and silver ripping to all-time highs for gold, silver finally playing catch up. And I want to talk here about this U.S. economy first, and then we'll go macro global scale. So inflation is still running hot, and the markets right now are basically just praying for that Fed rate cut. And we're rallying right now off the expectation that we're going to get a rate cut. But typically when we do finally get the rate cuts, it's because something's already broke. Something bad has happened. And so I wanted you to speculate a little bit, Andy, if you could, on what is finally going to burst this bubble or what is going to break in our system right now.
Yeah, I don't think there'll be any rate cuts. We started out the year. I mean, just look at the way they talked about inflation. It's non-existent, then it's transitory. Oh, it's here, it's structural, it's gone, it's back. I mean, they don't know, right? They don't know up from down, and there won't be any rate cuts. I think that we are far from that ever happening. And now you got Fed governors even coming out and saying, well, maybe there will be one rate cut at the end of the year. Maybe it's the beginning of 2025. They're just backing away from it completely and totally. And inflation is really not gone. I mean, it's like, for example, what got everyone so excited is that, the rates were inflation was up 0.1 or 0.2% only. Well, annualize that out, it's still, it's still moving in a direction that if you really look at the numbers, it's a lot higher than that 0.3, 0.4, 0.5. If you add in food, energy, housing, it's a lot higher than that. They strip that stuff out, and we're well above what their 2% target is on an annualized basis, way above that. But they continue to take things out of the measurement, like coffee, which was up 80% in the last year. They stripped it out of the CPI as of this last month, up 40 or 50% just in this year alone. It's not going away. But what we're seeing is prices in the real economy are going much higher. Oil is going, is high still. Copper at all-time highs. Gold at all-time highs. And many of the commodities, the critical commodities and the natural resources that we need, they're inflating. They're going higher. And so I think I don't really care what the Fed is telling me about inflation. I don't, because I think that when the critical inputs are surging, nearly everything we build and buy and eat are rising in price. And yet they continue to strip these things out to mask what inflation is really doing. And more importantly, when you think about, look, if you I'm trying to remember this number, if you printed $100 or spent $100 every second of every day, 24/7 for the next almost 2,000 years, like 1,965 years, that would equate to what the U.S. government has spent in the last year, $6 trillion. Trillion seconds ago is 31,688 years ago. But what has fundamentally changed since then? Nothing. The government spending is absolutely asinine and off the charts, where we are spending or accumulating $1 trillion of debt every 100 days. We're addicted to spending. And now don't be surprised to see another round of, if we did see rate cuts, let's just call it quantitative easing, where they're going to come in and stimulate the economy again if they have to. But at that point, they've signaled capitulation. All roads lead to the same place. I think what's going to break this economy is the fact that the rest of the world is pissed off. The rest of the world doesn't want to accumulate or hold our currency, which is depreciating rapidly. This is why they're continuing to mask the real inflation numbers. But they don't want to hold a currency where the governments have chosen inflation over austerity and where they can weaponize the dollar. And if you're not on their side ideologically, well, they're going to come and penalize you, sanction you, and maybe even confiscate your assets. In the case of what's going on with Russia, they're now talking about confiscating those assets and taking like the accumulated interest right now of $5 billion or so interest that was accumulated on the holdings, the Russian holdings, their bonds and whatnot, and use it to provide weapons for the Ukraine. I mean, how asinine is that? At the same time, Janet Yellen says to China, listen, we're okay with you guys being friends, you and Russia. Well, thank you, Madam Secretary. But if you give 1 penny to Russia for their war efforts, we will sanction your banks, your companies, and Beijing itself. Never mind the fact that we've given $200 billion with no congressional oversight to the Ukraine, but we can do that because we're the world reserve currency. So what's going to bust this? A culmination of everything: the mismanagement of the dollar, brain dead monetary policy, irresponsible fiscal policy, and rampant weaponization of the dollar that I think has got at least half the world, everyone in the Southern Hemisphere, very upset and concerned about, to the point where 26 countries have formally applied to the BRICS on top of the 10, and now there's rumor of a half a dozen or more of the countries in the Eurasian continent, Laos and Vietnam, and these countries that produce the majority of all the rare earth metals. Well, they want to join the BRICS too. This is to me where the linchpin, where the breaking of the U.S. hegemony happens. And you could argue it's already happened, but the supremacy is still there until it's not. And that's the little by little by little by little, then bang, all at once. It's the logarithmic decay. All of these things are chipping away at the dollar supremacy, at the dollar hegemony. And that is what breaks the economy, the all at once. And I think what's happening with the inflation is just part of it. It's a broader mismanagement of the entire economic system in this country.
Yeah. And you gave such a great presentation up there in Vancouver titled The Logarithmic Decay of the U.S. Dollar and Empire. And I just found this stat this morning. The U.S. national debt has now hit a new record of $34.6 trillion in April, up $1.6 trillion just since 2023 of last year, September. So just in September, right, we've added $1.6 trillion. And so we're at a pace now of adding a few trillion every year, basically.
Dude, it took 200 years to create the first trillion in debt. Right. We're doing it every 100 days now. It's unsustainable.
And so yesterday, you'll get a kick out of this. I look up on the Fed website, the Federal Reserve economic data, right? And I type in the search bar inflation because I just wanted to get the updated numbers. Well, there's literally hundreds of different inflation stats. I mean, the 30-year expectation, the this that excludes this. It's like, what are we doing here? And so, like you said, I want to hone in on the disconnect between Wall Street and Main Street, because I'm listening every single day. I listen to Bubble Vision, CNBC. I like to think of how the enemy's moving against us, right? And what they're selling to the masses. And they're trying to decode all this data and spin it off as positive and justify the market still rallying on this false expectation. Remember, they priced in 6 rate cuts last year.
Right.
They were pricing in 7 rate cuts this year.
That's my point. Yep.
And they've put their foot in their mouth in that regard, because now the expectation is maybe 1 or 2. And you even just had the CEO of Goldman Sachs say none this year.
There's going to be none. There won't be any. So
the adults in the room get it, and they understand that we're actually at more of a normal Fed funds rate right now, right? And the problems in our economy and our asset prices have been driven by the lowest interest rates in 5,000 years that we had over the last decade, right? So honing in on this disconnect between Main Street and Wall Street, basically throughout the rest of this year, right, we're expecting it to get a little bit shaky, but what I'm seeing right now is they're finally starting to admit that we're breaking, right? Yep. And if you understand how to decode the data and break it down, you see it, and we've been calling it now for a while. I was listening to DiMartino Booth. She was talking about how the unemployment numbers, a couple of different metrics, the recession actually started back in October for jobs after they make their revisions, after they adjust it. So can you speak to this disconnect that we're seeing right now between Main Street and Wall Street?
Yeah, I mean, the stock market doesn't reflect the economy, in my opinion, much at all. I mean, if you look at the stocks that are going through the roof, it's the big ones, the Amazon, the Netflix, the Nvidia. It's the big companies. None of these companies are, you look at the S&P 500 or the Wilshire 500 or the Russell 2000, none of these, the majority of those stocks, which are a better representation of Main Street, are flat or down. And I think when you say, oh, look, the stock market is booming, we have a strong economy, it's crap. It's complete and total crap. In fact, it's the weakness in the economy, you could argue, that almost benefits the stock market, because the more weakness, the more the Fed prints, the more the Fed creates stimulus, and it does nothing for the Main Street. I mean, it's like giving another shot of heroin, but it continues to pump air into the stock market bubble. You talk about, these low interest rates. You're right. We had the lowest interest rates in human history for a decade, coupled with this crazy amount of money creation. And you say 1.6 trillion since September. A trillion seconds ago was 31,688 years ago. These numbers are gigantic. You could argue we're already in the midst of a depression. If you take out all of the stimulus, go back to 2008, the Fed balance sheet was 800 billion. At its peak just a few months ago was 9 trillion. You take out all of that 8 trillion plus in money creation and stimulus, coupled with the lowest interest rates ever, And what you have is price discovery that is nowhere near what it is now. And as a matter of fact, because of the low interest rates, because of all the money creation, price discovery is gone. We don't know what real prices truly are. And I think that the disconnection between Wall Street and Main Street is what gives the talking heads the ability to say, look, everything's great. Look, inflation and it's all great. They lie to us about inflation. They lie to us about unemployment. All of these statistics come from the Bureau of Labor Statistics. It should be the BS, not the BLS. And they're lies, and continually. And so, yeah, when you look at a stock market that's going through the roof, you have a half a dozen companies or less supporting the entire market, all of Wall Street. And what you see when you look at a broader indication of these stocks, which would be a representation of Main Street, the mom and pop shops are dying. They can't keep up with this inflation, with this cost, and with the competition of the big companies, the behemoths that are crowding out the smaller companies. So yeah, I think that it's an illusion, and it's done specifically for for eye appeal and false rhetoric that most people are beginning to feel that something ain't right. And, just go to the grocery store. And I think you'll understand that.
Well, to your point, when a company now announces layoffs, the stock pumps, right? And now we're getting these earnings expectations that are beating. But when you look, well, the company laid off 10,000 people. And so those are real lives that have been affected, but the stock goes up. And so CNBC can spout that. To your point further, inflation ticks down by 0.1% last reading, and everybody says, okay, inflation's cooling. It ticked down 0.1%, and overall, we're still way above the 2% target, but it allows them to run with that narrative. They can say that the Fed has reduced their balance sheet. Well, relatively, when you go to a $10 trillion balance sheet from an $800 billion, like you said, back during the Great Financial Crisis, to now a $10 trillion, and we reduce it back down to 8 or 9 or wherever we're at, yeah, you technically reduced it, but you still have the full backstop here of what they've done by taking that balance sheet up to nearly 10 trillion. So
yeah, and when you look at the unemployment numbers, like you said, all the good paying jobs, lots of these good paying full-time with benefit jobs are being shed, and the employment numbers that we are seeing are more part-time jobs that people are working 2 and 3 part-time jobs just to make ends meet. You look at the number of big paying jobs that have been cut by the corporations, to your point, it's extraordinary. And so the lies that are coming, and look, when you come off of a pandemic, by the way, where half of the world was sitting at home or more, what do you expect? I mean, yeah, you're going to see, as things normalize, you're going to see unemployment numbers get better, but at the same time, those unemployment numbers are getting better. It's coming at the expense of good paying jobs in an inflationary environment with rising rates. With low rates, you can be as expansive as you want. You can build another division to your business. You can hire more people. You can do all of these things if money is free. But as money gets more expensive, you have to rein things in, and that's coming at the expense of high paying jobs that pay benefits in an environment where insurance is going through the roof. So it's all a lie. And the worst part about it is that you look at the CNBC, the talking heads, and they spout this stuff that keep people perpetually confused and not understanding what's really happening. And if all you do is follow the mainstream narrative, you're walking blindly with the rest of the sheep into a very bad storm that's coming. And, I think that the numbers that we are being told are completely and totally detached from reality, as is the performance of Wall Street from Main Street.
Yeah. Final question on the U.S. economy as it relates to the banking crisis, which they're trying to say is over, right? But just this morning, this just came across my desk. For the first time since 2008 financial crisis, a top-rated commercial mortgage-backed bond has experienced a loss. This is a triple-rated portion of a $308 million commercial mortgage-backed security. So we're seeing that the commercial real estate space, I call it the commercial space, is being sacrificed right now, without a doubt. That portion of the real estate market definitely being hit hard. And this relates back to the bank balance sheets. So many of those small regional banks funding these commercial loans. And so is the banking crisis over? And your thoughts on the effect that real estate is having on that?
Yeah, well, I mean, I saw a statistic the other day. I don't know if I've ever been more blown away by just the sheer magnitude of this. The former one AT&T Center in St. Louis, the third tallest building in St. Louis, 44 stories tall, right? It sold for $205 million in 2006. It just sold for $3.6 million. Houses up and down my street are worth more than that. Um, and this is the third tallest building. You too can own a 44-story office building for the low price of $3.6 million. Or the Holiday Inn Express in Washington, D.C. It has $83 million still owed to it, and the owners defaulted, right? So it went to auction. And the only entity at the auction was the lender. That's it. And they got it in foreclosure at 18.5 million, and they're still owed 83 million. No one else even wanted it. So when you talk about where we are in the commercial real estate problem, it's just beginning. It's not getting worse. So you look at what's happening to the inner cities. The inner cities are becoming, scary places. Lawlessness and the immigration problem, illegal immigration problem, and being dumped in the inner cities. No one wants to go to the inner cities anymore, and it's having massive implications on the commercial real estate, which is owned 70% by the regional banks. There's going to be more and more bank failures. And even Powell says, well, they'll call them consolidations, right? Just like we call, money printing, quantitative easing. And there'll be lots of consolidations, and JP Morgan will get bigger and bigger and bigger and bigger. And many of these banks will go bust. And I don't know how many people even understand the term bail-in, bank bail-in, which was written into the Dodd-Frank Act. If there is no one there to gobble up the assets, like JP Morgan, and they don't want them, that bank will fail and be bailed in, where the depositors are unsecured general creditors, i.e. last to get paid, last in line. And this is a law that was written into the Dodd-Frank Act right after the great financial crisis. Now, we haven't experienced it yet because the banks that have failed have been gobbled up. But there will come a time, I believe, before this is all said and done, when you see a bank bail-in, which will freak people out to a level that I don't think anyone has even experienced, because the majority of the people in this country don't even know what a bail-in is. They have no idea. Just Google bail-in Dodd-Frank Act, and if you don't, and you'll be blown away. Not you, Zach, but those out there. And, one thing that has kept people calm is their own residential real estate, right? And that's done well because most of the people are locked into rates at 4 and 5% or less, some even in the 3 range. And so the majority of all the mortgages are in that range. So, people are locked in. And even as they're, if we go back a year, and before all the house prices started to slide, you can't, but the rates were starting to rise. You can't move laterally in a rising rate environment. Even if your house has gone way higher, you can't take that mortgage with you. People are trapped, and a 3 and a 4% mortgage sounds great until you lose your job. And as the economy starts to slow down in this recessionary environment, in this illusionary environment, but the stock market's going higher. Yeah, right. That's not indicative of Main Street. So as Main Street and inflation run higher and rates go higher, making it much more prohibitive for the businesses to stay afloat. Yeah, this is something that I expect will have great ramifications on the residential real estate market, but not till a little bit later in the game. And that's when, things are really getting scary. But I mean, look, how about all the people that worked at the former AT&T One Center, the 44-story building, or the Holiday Inn Express, or any of these failures that we see? Where are they going to get a job? Are they going to start working part-time jobs? How are they going to pay for their mortgage? That's when it starts to spin further and further and further out of control. But yeah, to me, this is chaos waiting to happen, Zach. I hate to be the buzzkill or the doom and gloomer, but it's reality, and I think it's only going to get worse. I don't think the banking crisis has even begun to accentuate itself moving into the future.
Well, it's funny, and this is why I love you, Andy, is because you cut through all the fluff and the feel-good talk that the talking head pundits try to give us, because we want the truth, and the people are starting to see through the lies, right? But I was getting a good laugh because you can really tell who's over-leveraged right now. We just had Barry Sternlicht, I think is his name. He's one of the largest billionaire real estate hedge funds in the United States of America. And he was putting out the warning that we're going to see a bank failure every day. And I'm thinking, okay, well, maybe that's a little bit dramatic, right? Maybe we're not going to have one every single day, but I do, I'm right along there with you. This thing is not over. We still have a lot. But are we maybe over levered a little bit there? Because it seems like these guys are begging and praying for that Fed rate cut to bail them out. And I just visualized Jamie Dimon sitting there in the boardroom, just licking his lips, thinking of setting his exit plan. He's set to retire here maybe in a few years. So I'm thinking he wants to see this thing through, right? He's going to set the battle plan so they can just cut and slash through this banking crisis, picking up and acquiring, picking over the skeleton of kind of what's left of these assets. And so, yeah, it's an incredible time when you just simply look at the balance sheets and you can see it's breaking. You're seeing these auctions start to come through, and the real estate's lagging, which is what confuses so many people in a 24/7, 365 traded market these days, relatively speaking. We're used to things happening so much faster and quicker on a day-to-day basis. This real estate and the lag effect has fooled a lot of people. And I always make this caveat. You can't generally just say, oh, real estate's going to crash. That's not how this works. There are some residential markets, prime location, prime spot, with a lack of supply that are still going up. And they might still go up in price because folks want to get out of that city that's set on fire and they want to come out to the nice neighborhood. And so it's a location by location basis. You got to understand your market. You got to understand the segment of real estate that you're in, whether you're, just looking to buy a home for your house or for your family, or if you're an investor, you have to understand your segment. You have to understand your market, because this is not a broad crash across the board. But I call it a real estate reset, because when you double the rates and the cost of debt, you're resetting the whole playing field. And that's what real estate's going through. It's going to relate to the banking crisis. And speaking of the banking crisis and what we can do to protect ourselves, and this is why they don't want to talk about this, is because gold's gone to an all-time high. Silver's finally playing catch up. And when someone calls you up, Andy, and they order some gold and some silver and they get it directly from you, yeah, they're going to pay you a little bit of a fee. But then after that, there's no management fees. There's nothing after that, right? They're able to take custody of an asset that has utility with no counterparty risk. And that's what I keep on mentioning to my audience, is I'm stacking utility with no counterparty risk. And I include gold, silver, and I like my XRP too, right? And we're going to get Andy with some XRP here soon. But your thoughts right now on the move that we've seen in gold and silver, how the CNBC talking heads are trying to be hush-hush about this one. Your thoughts on this?
Yeah, I mean, it's interesting. You look at the public participation in gold and silver. Look, I mean, people have been focusing on NVIDIA, on cryptocurrencies, and instant gratification not being fast enough, and have ignored the tortoise that ultimately ends up winning the race, and that is gold and silver. And it's interesting in the respect that the U.S. public has sold largely into this rally. If you look at the ETF, the ETF flows of GLD and SLV, they're falling at a 45-degree angle, meaning that people who bought into gold and silver, I don't know when, but at some point expecting much greater returns, because when I started in this industry, if you made 7% a year, you're a rock star. And my mentor, Richard Russell, said that. I mean, that's rock star returns. And this environment that we have entered into, where you get parabolic returns in the snap of a finger, is not really how markets work. And people grow tired of waiting for the tortoise. They want the hare. They want instant gratification, and they want it now. And yet gold continues to outperform. But without American participation, what we are seeing is massive central bank buying. That's first and foremost. And, we're seeing these outflows, Zach, of gold that I've never seen before. And I want to see if I can find something here. Bear with me, because it really underscores what you're talking about. And I have it right here.
Well, you haven't heard them mention the fact that gold has outperformed the S&P 500 this year. You haven't heard that once.
It's outperformed it for the past 25 years, actually. Go back to 2000, the S&P's averaged just over 7%, even when you throw dividends into it, the dividend reinvestment, which have been next to nil over that period of time. It's outperformed it. It's outperformed everything with the exception of Bitcoin, which started from zero. But since 2000, it's outperformed the bond market. It's outperformed the S&P. This is why you're seeing governments sell treasuries, which have counterparty risk, as we now see, and replacing it with gold, which has outperformed it, which cannot be confiscated, which cannot be defaulted upon. Now, here's the interesting thing. As the American public has been selling, right, and out of this market by, if 0.5% allocation in the gold and silver market from Joe and Jane six-pack to the Harvard Endowment Fund is a reflection of the United States, it's the opposite of that in China. And what's really interesting to me, which is something that you don't hear unless you listen to a guy like me, is the outflows of metal from the COMEX heading towards Hong Kong. And I'm going to explain something to you real quick here. So the COMEX market typically in New York typically deals with 100-ounce bars, right? And they have something called the mini contract, which are kilo bars. Well, the Shanghai Gold Exchange they transact in kilo bars. Now, a week ago Friday, as an example, 7,560 kilo bars of gold were shipped out to Hong Kong. I'm going to explain all of this as we go here, but that's $573 million worth of gold. Who's got that kind of bread? That's 243,000 ounces of gold. And when you realize that all of the volume right now in the Shanghai Gold Exchange, coupled with the Shanghai Futures Exchange, the combined volume has increased by over 200% in the last 60 days. And all of a sudden, it is the second largest gold trading market in the world after the London Bullion Market Association. It has now surpassed the COMEX. Why is no one telling us this? But here's the interesting thing. When there is a Brics vault in Hong Kong, and it is a COMEX vault. And whenever metal goes to this vault, leaving the COMEX, it is done so for what's called exchange for physical. That's the only time we ever see metal heading into this vault. And so I'm dealing with some allergies. And when metal gets shipped, exchange for physical means that you buy a contract on COMEX in New York, and you have it delivered in what's called the OTC market, off the COMEX platform, but it's delivered to another country. Typically, it's London, where you buy a contract in the US and then take physical delivery in London. But when it happens in Hong Kong, and we've seen this massive increase of 200% increase in the last 60 days, what you are seeing is these kilo bars that are being delivered to Hong Kong and then immediately trucked over to the Shanghai Metals Exchange and sold to the rest of the world, where Iran can sell their oil to China for yuan, which is immediately convertible into gold on the Shanghai Gold Exchange, and sidestep sanctions. And when you see this massive volume, so you have the Chinese supporting, and largely the Chinese and the Brics countries supporting the price of gold, where their ETFs in China are triggering stops on the way up. They're moving up so fast that the breakers are being triggered. At the same time, it's moving in the opposite direction in the West, which is crazy. And right now, to give you an idea of what they are doing now, in Shanghai, today they have silver priced at almost $4 an ounce more for purchase than on COMEX. And what does that mean? That means that the traders who have the ability to access COMEX, LBMA, and Shanghai, the big commercial banks, they will buy in the West and deliver in the East, like we are seeing, to grab that arbitrage. That metal's never, ever, ever coming back. And gold has been as high as $150 an ounce higher in Shanghai than in the West. It's not that high right now, but they are incentivizing slowly the traders to arbitrage whatever they can get here and deliver there, to the point where the LBMA, the London Metals Association, 140-year-old, the oldest metals market in the world, has its second lowest allocation of silver ever in history. And a lot of people even debate those numbers because those numbers include a lot of the ETFs, and they wonder if they're being double counted. The bottom line is what the BRICS nations are doing. They are revaluing commodities. They are replacing commodities with U.S. treasuries, in particular gold, silver, and oil. India has imported over 500 million ounces of silver in the past 2.5 years. There's only 41 or 42 million ounces of silver backing the bars that are, or the contracts that are issued on COMEX right now. They've imported 11 times the amount of silver in the registered category in the past 2.5 years. There's only 300 million ounces, period, of silver on COMEX, of which 95% of it belongs to people who ain't selling it, like me, like my clients. I have 2 clients in Brics, New York, which is a COMEX facility that has over 1 million ounces each. They each do. They're not selling it. That's eligible. The registered category, just over 40 million ounces. So when you think that India, quietly, using the suppression of the Western market, the idiots who suppress the market, we're playing right into the hands of the Brics, who are gobbling up everything and anything that's not nailed down and now arbitraging it. So much so that the Shanghai Metals Exchange is now the number 2 largest and most influential trading hub for commodities on the planet, surpassing the COMEX. Yeah, it's just beginning.
Yeah, so I'm seeing reports of anywhere from $35 to $39 US equivalent per ounce for silver. So
it's a lot higher, but I take that back. You're right. You're correct. I'm sorry. You're right.
Yeah.
It's 3 to. There's a guy on Twitter, the Ghost.
By Oriental Ghost.
That's it.
Yep.
That's it. And his numbers are amazing.
Yep.
And just the other day it was up to about $4, and it was typically been about 3.
Mm-hmm.
But that's exactly it. And that's not even a real reflection of what the price is. It's I think, a way to slowly arbitrage. And, about a year ago when they announced that the Moscow Metals Exchange was coming online, I said, here's what they're going to do. When they've siphoned off all that they can, when the Western markets are really absent of free metal to deliver, that's when they're going to turn up the heat. And maybe you wake up one morning and see Shanghai saying, well, no, silver's $60 an ounce and gold is 5,000 or silver's 100. Like that, everything changes. And everything that's not nailed down will flee to the east, and it will never come back, and they will reset the price. It is being remonetized. It is being revalued, because to accept treasuries as a place to park your money safely, when if you do not align ideologically with the West, it's gone and it will be sanctioned. And yet we are a hypocritical, insolvent country making these rules. It doesn't stand up well. But what's really smart, I guess you could say, about the Brics nations is that they do things methodically. This is not a shotgun deal. It's been going on for 18 years.
Yeah.
And now they are, as it's getting closer to the end game, it's starting to accelerate, and the countries joining are expanding, and 36 countries have formally applied. A bunch of the Eurasian continent is formally applying. That's on top of the 25 that have informally applied and the 10 that are already there. So when you look at this starting to accelerate, look, I have said all along, there will be a marriage of gold, which is the only other tier 1 reserve asset, period. The only other one. You got the IMF, who just came out and said that the gold-backed Zimbabwe currency is a step in the right direction. Well, what did they say earlier in the year, last year? That a report, gold as an international reserve currency, comma, a barbarous relic no more, question mark. That was an IMF report. Kristalina Georgieva, what did she just say? The head of the IMF. A CBDC not pegged to something is fiat. And now they're saying that the gold-backed Zimbabwe currency is a good thing and a step in the right direction. This is where we are going. This is why these countries are sucking all the gold over that they can. It will be replaced or remonetized, and I do believe it will take the place, in many respects, or already has, of the U.S. Treasury. That's why China's down to just over $700 billion from over $2 trillion. They're selling treasuries, which can be confiscated and sanctioned, and replacing it with gold, which has outperformed the treasury market for 25 years with no counterparty risk. To your point, no sanction risk, no default risk, and it is being remonetized across the globe. Zoltan Pozsar said it best. We are entering a new system, Bretton Woods 3. Bretton Woods 1, when we replaced the pound sterling and after World War II. Bretton Woods 2, when we became the petrodollar in 73 or 4. Bretton Woods 3, a system described by transparency, XRP, and commodities. Gold, the only other tier 1 reserve asset. This is why you are seeing a a real push by these Eastern Bloc countries to accumulate everything that they can, methodically, slowly, not too fast to cut off their nose to spite their face. But you will see, I believe, gold and silver much, much, much higher than it is right now. Don't know how or when, but it's inevitable as de-dollarization and de-treasurization continues.
Yeah, and I know we're running out of time here, so let me just get a couple more in. When I had Lynette Zhang on my show a couple months back, she actually said that she thought she'd calculated out that the fundamental value for gold was about 40,000 US dollars. Now, I joked with her and I said, well, anywhere between 4 and 40,000, 4,000 and 40,000 sounds pretty good to me. I'm excited to find out. And I know she has a much higher fundamental value for silver as well. What do you think of that type of statement, that type of calculation?
I mean, if you take the debt and divide it by the gold held at Fort Knox, I guess that's probably how she did it.
Yeah.
But it's interesting, as you start to get much and much, much higher in the price of metal, it starts to become, I think, more plausible. When you talk about $25,000 an ounce gold, the difference from 2 to 3,000 is 50%. That's a big move. But from 3 to 4,000 is 33% increase. From 4 to 5,000 is only 25% increase. And this pattern starts to emerge. And you go from 9 to 10,000, it's only 11% gain. And from 14 to 15,000, a 7% gain. And as you start to go higher and higher and higher, it's not as unrealistic. Look, when I started in this industry, Zach, the Dow Jones was 2,100. And the first conference I went to in 1990, the guy said the Dow Jones will go to 10,000. He was laughed off the stage. The one thing I've learned in 34 years, the only thing that I can tell you I know to be fact in finance is that markets go higher than anyone ever thinks possible on the upside and will fall further to the downside than anyone ever thinks possible. So to put it at those levels is not unrealistic. And look, if you're going to use gold, which is the only other tier one reserve asset in the world, and peg it to a new system, it's interesting. If you look at all the central banks, gold is held on their balance sheet in an account called the gold revaluation account. That's what Roosevelt did right behind me there. He confiscated gold and devalued the dollar, and gold went up by 40%. The head of the Dutch National Bank says we need to revalue gold and make our balance sheets good. And pop gold way up, the balance sheet looks great against your liabilities. But if you're going to tie it to gold, the way that I think they would do it would be to jack gold way, way up and then use 10 or 20% backing of each new currency unit. So they still have 80 or 90% monetary flexibility, but you have to put it up to a level where it will support the ability of governments to have monetary policy, but enough tied to it to not let it float away like they've been doing, creating endless amounts of debt and money. So Lynette's a smart lady and she's a friend of mine, and I know she's very analytical. My guess is she took the amount of gold supposedly held at Fort Knox and divided it into the debt. It's not too crazy. Yeah. And in particular, when you realize that it has to be, I believe, part of a new system, the only way that you will make that system work and have it backed by gold is to not make it redeemable, but make it immutable on a blockchain and put it high enough with just enough tied to it to allow monetary flexibility, but to remain also put into it fiscal sanity.
Yeah. And so we are actually starting to see this right now in the United States. They just passed an basically anti-CBDC bill that would stop the Fed from issuing a CBDC. And to your point, we're now starting to see kind of an emergence of stable coins that are backed by real world assets. And in most part right now, the current stable coins are backed by treasuries, cash equivalents or treasuries. And the emergence of stablecoins backed by gold and other commodities, I believe, will be here soon. And so we're starting to see this. We got the FIT 21 bill passed. That's off to Biden's desk. He'll have to, put down the ice cream and decide if he wants to sign that or veto it or what he wants to do with it. But nonetheless, we're starting to finally see the United States of America pushing in that direction. I know our time's wrapping up. I would, love to talk more about how, I think the banning of the CBDC for the Fed, I think that's a good conversation starter. Why do we even have a Federal Reserve is where I'd like to go with that conversation, right? If we don't trust them to issue a CBDC, why do they even exist? But I know our time's wrapping up, but just your thoughts on that role that you mentioned of distributed ledger technology. We're not just talking about XRP. Maybe there will be some others too. You got to learn about XRP. And so just a final thought on basically real world assets and commodity backed stable coins.
That's the only way it's going to work.
Yeah.
And when Chris, the head of the IMF, says so, that a CBDC not pegged to something will be fiat, completely and totally think that that is where we're going. When she applauds the Zimbabwe gold-backed currency, digital gold-backed currency is the way to go, I think it says that. What is Sergei Glaziev always told us? It will be a digital currency pegged to a basket of commodities. What is the logical commodity? It's gold. And I do think that's exactly where we're going. If I had to guess, the laws and the legislations that they're putting into place, in terms of Tom Emmer's bill from Minnesota, where I'm originally from, I like the fact that he realizes that this could be, something that the state could use for surveillance and the way that the Chinese are doing it and your social credit score and all this stuff. It does need to be thought about in particular. I think it really does, but I think it also would pave the way for them to say, well, here's a way it could be done with transparency and backed by something and with no surveillance. I mean, I think that's where we are heading. And in terms of the other cryptocurrencies, look, wouldn't surprise me one bit at all if part of what they're trying to do is take go after Tether and pull out all the treasuries, go hard at them, take the treasuries that they're supposedly owning and put it into something more that they can manage, that they can regulate. I mean, we're heading in this direction. There's no question about it. And it's too bipartisan right now. And the Democrats and the Republicans fighting about all of this, but we are heading in that direction where it's going to be regulated. We will see a marriage between blockchain technology and commodities. It will be stable coins, and that's what the CBDC will be. I believe that in my heart, and I think there will be a CBDC. It's just a matter of how they find unity amongst both sides to usher it in. It will have to be something that inspires confidence, and that's why I think it will be a stable coin, and it will be something like gold pegging to a new system, and we will get rid of the thousands of cryptocurrencies which are just pump and dump scam, and only use the ones that have utility and that can be regulated and that will inspire confidence. It's just kind of cleaning up the system, if you will. But really, when you see some of these bills and some of the discussion, it seems to me that it's legitimizing what cryptocurrencies really are, just the right ones. And it seems to be more of a push towards stable coins or like Ethereum, the new ETF, the rails in which all of this stuff rides. So yeah. Cryptocurrency is not going away. Just the ones that don't provide utility may. And I'm learning more and more about this, Zach. I just think that our two worlds are going to collide, and there will be a unity, a marriage of commodities and a la stable coins and blockchain technology. It's inevitable at this point. The system that we have now has lost all trust. It's a glass broken into a million pieces. You can't put it back together, in my opinion.
Yeah, and it's interesting because Ripple actually just announced that they're going to be launching a US dollar-backed stablecoin. So even them, they have XRP. They understand the role of a stablecoin and why they're partners, why they need that. It solves the last mile problem, right? You can solve the cross-border with XRP, but the last mile or what people want to hold would be a stablecoin. And so they're actually set to launch a US dollar-backed stablecoin here soon. So that's going to be very interesting. And my final question, does Andy Schectman own any XRP yet? And if not, are you considering?
Actually, I do own some, and I have a very dear friend of mine who lives a few houses away that helps me buy it because I'm afraid to even put that damn thing in the computer. So, and I know you don't want to hear this, but I did buy a little bit of Bitcoin and I did buy some XRP, and old dogs can learn new tricks, and I am trying to educate myself as much as possible. But in the back of my mind, more than anything, because what I know is what I put in my hand. What I know is it's been my whole life, 34 years of knowing hard assets. I don't want to be 20 years from now saying, why didn't I was on the shows with these guys. Why didn't I do it? And I feel comfortable enough to dabble and to put my toe in and to start accumulating these things on a semi-weekly basis. Every other week, I'm buying just a little bit, and he's helping me do it. So yes, I own some, not as much as your listeners or you do, but I'll be in the back of the boat as the boat takes off, and hopefully before too long, maybe as I learn more and have greater confidence in what I am doing, I'll own some more. But I won't be left behind like I would have before I met you and all the other guys who have helped expand my mind. And there's a lot to be learned from that, man. And that is, don't get married to one ideology. Have a broader perspective on the world, because if you don't, you get left behind, and in some cases maybe to a great detriment.
Well, I'll have to throw that. Everybody will love that if I throw that in the title and the thumbnail. Andy owns XRP, right? We got the official declaration here.
Just a little bit.
Just a little.
But you know what? A little bit is a start. And I started doing this in Vancouver. When I came back from Vancouver, I started doing this. So it's been about 6 months that I've been accumulating it. So it's starting to add up, and I'll continue to do it and see it through.
Yeah. No. Well, it's an absolute pleasure to have you back on today, Andy.
You too,
please remember, everybody can find Andy at milesfranklin.com. He's linked up on my website as well. If you go there, you get in touch with his people, tell them that I sent you over. They will definitely hook you up some of the best service and prices in the industry. As a matter of fact, they will get you taken care of.
That.
Go ahead.
And I love you for saying that. But for your listeners, our website, and we have a new version coming out in about 10 days, 2 weeks, 3 weeks, only list price up to 10 grand. And the prices could be, they're not that wonderful on the website for smaller amounts. If for your listeners, send an email to info@milesfranklin.com, say Zach sent me, and you will get a price list that is as good or better than anywhere in America. For your listeners, any questions you've heard on this interview, maybe not really the crypto questions yet, because I'm still learning, but anything other, or questions on IRAs, or you just want the price list, it'll be really worth your time. info@milesfranklin, Zach sent me, and we will take special care, answer any questions you have, or just send you the price list, or a combination of both.
Yeah. Industry leading transparency and service. Andy, we really do appreciate you. And it's just an absolute pleasure to have you back on. Everybody on the way out, if you appreciated this content, if you could like this video, make sure you subscribe and hit that notification bell so you don't miss any of our updates. Everything's at my website, zachrector.com. I'm going to link up Andy's info down below. And Andy, we will see you again here soon, hopefully.
Yeah, man, I think the title should be Old Dogs Can Learn New Tricks. So something like
there we
that.
go.
I appreciate you, Zach. You stay well, brother. And look, parting thought, between now and October and November, the big Brics meeting and the election, there's going to be a ton to talk about. So I'm just a text away, brother. You just call me anytime, text me. I'd love to come back on. And so I think there's going to be a lot to talk about. But thanks for having me. You stay well, and look forward to catching up with you soon.
Absolutely. Thank you so much. God bless all of you guys listening out there.
God
we will
bless.
see you guys in the next one. Thank you.